From Kansas State University, this is Agriculture Today. Along with Samantha Bennett, I'm Jeff Wickman. We start off with this week's grain market report with K-State grain market economist Dan O'Brien. In addition to covering the cash grain and futures markets, Dan touches on how the averted railroad strike in the U.S., the situation in China, and a move by the Argentinian government to spur soybean sales could impact the grain markets. Then K-State agricultural economist Reid and LaVell Winsor from the Farm Analyst program discuss land lease options, a topic they'll be covering extensively as part of a 4-part workshop for landowners and tenants in January and February. And finally, K-State meteorologist Chip Redmond has this week's agricultural weather, including the long-range outlook. It's all just ahead on Agriculture Today over the K-State Radio Network. This is Agriculture Today. Along with Samantha Bennett, I'm Jeff Wickman. First up is our weekly look at the activity taking place in the cash grain and futures markets with K-State grain market economist Dan O'Brien. This week, Dan focuses on the cash markets in Kansas and some things happening in the U.S. and internationally that might impact the grain markets. Dan, let's just jump right into this and start off by taking a look at this week's futures markets and cash grain markets.
Yes, on Thursday, the corn market closed down across the board about 5 or 6 cents. The upfront Dees contract, Dees 22, which is entering into the delivery period, dropped 12 cents. So interesting how, as we began the end of contract time frame, that front month lowered the pressures to do that in terms of how the delivery mechanism is working out. The same thing is happening for Dees 22 hard red winter wheat, Kansas hard red winter wheat, traded on the Chicago Mercantile Exchange. We didn't see quite the extraordinary drop-off for the front month, but generally these closed at 903. March, now the lead contract for hardwood in terms of what elevators are doing their basis bids off of at 890 and a quarter. I should also say March 23 for corn was 660, and for soybeans we were down 38, 39 cents. There was a time, Jeff, when we dropped 38 to 39 cents on the markets, and we'd wonder if the sky is falling. But now that's almost the type of volatility that we're not that surprised by that nowadays. So when you look at that rolling in terms of the lead contract for what elevators are doing for their basis calculations has affected cash prices out in the country and has affected basis bids. Still strong prices, but like for corn in Northwest Kansas, Colby 760 for corn, 755 in Salina, 721 top bid in Topeka, Garden City 801, Hutchinson 760, Columbus 756, and that 801 figure again you're comparing that to March at 660, so you're $1.41 above. So it's still a tremendous price. Southern prices all positive also. Strongest, of course, in Garden City again, but others, Salina 55 over, Garden City at 70 over, Colby, Topeka 40, 44, 49 in Hutchinson, 19 over in Columbus. What has been really varying in the countryside has been the soybean spot bids, and we've seen soybean basis pretty strong in Kansas, and I think it's following from the river transportation, barge transportation problems that they have in the Missouri River system, where they slow down the flow of beans coming down the river to the ports at the Gulf. So given that the river system is having its problems, we're seeing strong buying coming up into our neck of the woods, into at least central Kansas. You see the Topeka bid at 40 over for soybeans, 49 over in Hutchinson, 14 over in Salina. Pretty strong, but yet out in farther to the west in Colby, you're 55 under, Garden City 23 under. Those historically over the last several years, it's been pretty good basis bid. But for us to be positive now must mean that we're seeing business coming up from the Gulf, try to get hold of beans where they can now by rail and take them from Kansas instead of Illinois. And for wheat bids, you do see a variation across the state. You see bids in Salina and in Hutchinson at just 2 under, so 888. Tremendous bids. 816 Garden City, 878 in Topeka, 870 in Colby, 867 in Columbus. Pretty strong bids. I would say also at ethanol plant, cash bid for corn Kansas at $7.70. And that, other than Nebraska averaging about 7.26 and Western Iowa 7.05, all the rest of the country averages below $7. So we here in Kansas have the strongest ethanol plant bid for corn that you're seeing in the U.S. Of course, we had a drought too, so that keeps the pressure on local cash markets.
And then in terms of futures markets, what are we seeing there?
Well, I think when I look at carrying charges in the market, if the market's starting to weaken, then you would see wider month-to-month carry. And right now, again, from March for corn, March 23 to May 23, you're seeing actually a decline in the futures market. Really, you're seeing month-to-month declines all the way out to December. Even though they have relatively more supplies of corn in the eastern corn belt, still overall in the U.S., corn futures are indicating that they're not giving any, very much, if any, incentive to store grain, that they want it now. For soybeans, you do see a little bit of carry from January to March, about 2.5 cents, just under 4 cents from March to May. So a little bit more incentive to store soybeans, even though the prices are gracious over $14. And for wheat, really a pretty similar situation to corn. And you go from March to May, you're declining by 2 cents on average per month. From May to July, about 3 cents per month. So really no incentive that the market is giving, the futures markets are giving to store grains. So on the one hand, the futures are saying we want grain now, but yet the recent trends for corn futures, March futures, have been pretty much sideways for the last 2 or so weeks, downward for wheat the last 2 or 3 weeks, and really upwards for soybeans on the upwards with a little bit of drop off in the last day or so on the January contract. We're in a time frame right now just ahead of the December 9th USDA WASDE report. And that report very likely will reflect the weakness that the U.S. grains are showing in terms of exports for corn, for sorghum, and for wheat. And if, in my own thinking, Jeff, if in those balance sheets the USDA drops or lowers their export projections appreciably for those three commodities, then you'll see ending stocks increase for corn, for sorghum, for hard red winter wheat, and the market could very well respond negatively. And given that we've been moving sideways for corn, downward for wheat, there's some risk there for farmers that if they've held this long, but yet they have cash flow needs out into December, there's risk after that December 9th report that we could see, well, we'll call it some relative weakness in the markets, even though the prices are still tremendous. But in terms of a sideways slower trend until we get past the first of the year, and then we'll just have to see what the January USDA numbers and where demand take us from there.
I guess in other news, we saw that the Senate has averted that rail strike, so that's at least some good news there.
Yeah, in fact, I think that the markets were assuming that was going to happen. In fact, if Congress did not pass something on its own, the president probably was going to, by executive order, do that. So it's interesting when you read the details. The strike is averted, but yet the negotiations go on. So I hope this isn't just a temporary reprieve on hard negotiations that still have to happen, and I think it is. But at least for now, we have a situation where the major rail movement in the country is still flowing, but yet we have people that are involved on the labor side of that probably aren't very happy with some of the things that may or may not be getting out of that. They may be getting higher pay, but do they have sick leave? Do they have the flexibility on the work side that they need? So you're balancing the labor issues for railroads versus what makes railroads operate efficiently, and that's ongoing, continuous, very efficient service. So we're trying to balance the labor part of that equation with the economies of scale and operation that happen when you really run railroads hard at high volume.
And I guess if we look internationally, there are things going on in China, but we don't really know how that might impact the U.S. at this point.
Yes. Well, if nothing else, we're unsure how the actions in China will impact their purchases of wheat, of corn, of soybeans. But what we do know is that it's likely to bring an economic slowdown to them, and you see it in their stock market numbers in terms of what they themselves are thinking about in terms of where their economy might go. So that's probably the indirect impact on agriculture of China's economy slowing and the overall world economy being affected are maybe as big, if not bigger, than just wondering if they'll buy grain, sorghum, or wheat in the next week.
And Argentina has taken some governmental steps to subsidize soybean sales.
Right. We could talk for way too long, and I'd say way more than I know well anyway, with regard to the impact of this, but of that move by the Argentine government to give an exchange rate break on sales of soybeans. So they want to generate cash. They want farmers to move soybeans out of storage and into the market and generate sales, to generate income that would provide tax revenue for the government. That's fine, but it's having impacts upon. So Argentina is selling raw soybeans. Normally, they have a well-developed processing industry. Normally, they take their soybeans and they process it and they sell soybean meal. But I have concerns about that on the backside. Also, Argentina is experiencing a very significant drought right now. So they're selling off their stock right now to generate cash in the market, and maybe the Chinese are buying it and some others, which is great. But where does that put them on the backside of this when their stocks are low? And if they have a drought coming in, where does that leave the world market on the next go around? And what that could do to world supply demand, and it's probably in the long run, although it just kind of mitigates and muffles the soybean market up front, on the backside, it could create a gap and a hole. And where does that put us in the fall of 2023? I guess that's the question that I have.
That's K-State grain market economist Dan O'Brien with this week's grain market report. For more information, including a complete breakdown of the cash grain prices in Kansas, visit agmanager.info. This is Agriculture Today over the K-State Radio Network.
This is Agriculture Today. We are back now with two guests in studio. We are joined by LaVell Winsor. She is a K-State Farm financial analyst. And Robin Reid, she is our K-State Farm economist. Today we're going to talk through farmland leasing basics. In our conversation beforehand, LaVell, you were telling me that this is one of the topics for ag agents that they usually get questions about. And both sides of the parties here are curious, landowners and those that are looking to lease that land themselves.
Yeah, and you're right. Our ag agents report this as land leasing as being one of the top questions that they get from both the farmers as the tenant as well as the landowner. And there's just a lot of kind of mystery around what other people are doing and what they might do. And so we're hoping to help everyone to understand so they can all be a little bit more on the same page.
And there's a lot of nuance surrounding this subject, a lot of changes and variability. And Robin, we'll actually talk through some of the laws surrounding even this area too in a future episode, but a lot of nuance here.
Yeah, and I think a lot of it just comes from, there's a lot of difference between the western side of the state and the eastern as far as how many are just cash leasing or doing crop share leases or some kind of the new different hybrid kind of leases that are in the middle. And I'll let LaVell talk about that a little bit.
Yeah, absolutely. LaVell, let's start through talking some of those leasing options that are commonly seen, starting with kind of the traditional leases that most people are probably used to more so.
Yes, and you're right. There are the very traditional models, which are cash rent, which a lot of people are very familiar with the cash rent. The key with the cash rent is always trying to figure out what the appropriate level is to set a year in advance, or maybe that's even for a few years of what that appropriate cash rent is. And so there's a lot of questions about that. And then another traditional one is the share crop, where a landowner and the farmer are sharing a portion of the crop along with a portion of the expenses as well. And so that tends to be maybe in some instances more fair, but there's more risk on various parties. And that may be one of the take-home messages for people is these different types of leases is trying to equalize the risk and the revenue for which side of that is taking the risk and being paid appropriately based on what type of leasing arrangement that they have.
Absolutely. Let's delve into kind of that cash rental leasing agreement kind of area. You mentioned that a lot of the times you're trying to predict almost a year or even further in advance when it comes to that. In a time like this where things are kind of tumultuous, I guess is a good word to say, economic-wise, what can a lot of people that are landowners expect?
Yeah, and so the thing that is very pleasing to a lot of people about having a cash rent lease arrangement is that both parties know. They know exactly what the dollars are going to be. The landowner can very well predict how much revenue they're going to have, when that money is going to come in. They don't have any expenses associated with that. And so it's very clear cut. But on the flip side, with a share crop arrangement, we don't necessarily know going into the season, what are the yields going to be? What are the prices going to be? What are the expenses going to be? And all of that is shared. So there's less known with that. And so it's more risky and a little less certain. And it depends on the landowner. They may like that uncertainty and like the idea of, okay, as the season goes on, it'll work out and I'll see what it is at the end of the year. But the cash rent, if we think about, there are a lot of older landowners who may like to know exactly what they're going to have. That's the allure of the cash rent arrangement. I guess if you take it all the way down to bare bones, it almost becomes somewhat transactional because it's very clear cut of exactly what that looks like. And there is a lot of variability on these share crop leases from the east to the west. And some of that has to do with soil types and things like that. But oftentimes the components that may be shared in a share lease, fertilizer is often shared. A lot of the chemicals are shared. And then the seed may or may not be shared in those arrangements. And there may be different percentages that are shared based upon the tradition of an area or the quality of the ground in an area as well.
And then we mentioned that there's kind of a newer type of lease that we're seeing more commonly across the state, and maybe various newer types of leases, plural here. So what are some of those?
Yeah, so there are some different types of leases that, I don't know, I would say maybe over the last 10 years or so have kind of risen to the top on some different types of leases. One of those is a net share. And that, again, is a share type arrangement. But what the parties try to do with that is they try to get down to a level of what is the appropriate level to share where the landlord will not have any payments of inputs off of that. So, of course, they're receiving a lesser share of the crop, but with the idea that they're not paying anything out of that revenue. So no inputs, no fertilizer, no chemical, no seed expenses that they have to pay. Again, the tricky thing is for the quality of the ground, making sure that that's a fair arrangement. So the landlord is receiving the appropriate amount and the tenant farmer has the appropriate amount to cover all of their expenses and still make a little money on that ground as well. So all of these with the shares are the trickiness of making sure that you get the appropriate allocation for the quality of the ground and where you're at in the state. If I was to say some things about a specific area of the state, another one would be a flex lease arrangement. And that is really where you're trying to get to the appropriate amount of the revenue, being where the landowner is getting paid in a good year. They're getting paid a little bit higher amount, but at the same time, the farmer is not paying too much of a higher share on that. So a lot of these arrangements, the bottom line that we're trying to think about is to be equitable between the landowner and that tenant farmer who's farming for them. And then on a totally different side, there are some landowners who may just have a farmer custom farm for them. And so then they're actually looking to the custom rates and they're hiring a farmer to just come in and custom. And so that's where the landowner is taking a lot more risk because they're managing the purchasing of those inputs. They're managing the sale of all of that crop. So they're taking a very, very active role in that. But sometimes can be a way that people segue out of farming their own ground or where they really want to take an active role in what's happening with that land.
Of all of those newer ones that are kind of emerging lease options, which one would you say is kind of the most common that you've seen across the state right now?
Of the more emerging ones, I would say the net lease is more common. And it's the aspect of once you figure out what the original split is going to be, what the original share is going to be, the landowner doesn't have any expenses beyond their traditional property taxes and anything associated with the land that would be their expense. And people, I think a lot of landowners do like that aspect of not having a bill come at the end of the year or throughout the season that they're writing a check out for
We can't cover everything having to do with these topics just because there is so much nuance surrounding it. But that's why you guys, both of you, are hosting these, The Power of Negotiation and Communication. It's for Midwestern women in ag, and it's really, several day conferences that you guys are going to be doing where you're covering subjects just like this and answering some of those hot button issues that people are really wanting to understand further. So tell us a bit about these.
So, yes, this is actually a series that we're going to do as kind of a hybrid delivery. At the same time that we're doing it here in Kansas, Nebraska, and Indiana will also be doing the same program. So how this works is our keynote speakers will be broadcasted to host locations. We have 34 host locations across the state of Kansas. It's going to be Wednesday nights for 4 weeks in a row, starting at 5:30 with a dinner, running till 8:30 that night. And we're really hitting all different aspects of agricultural leases, both from the tenant side and the landowner side. So just to give you kind of an overview, we're going to start out with just a general look at the ag economy. What do people need to know about what's going on right now? Obviously, a lot of moving parts with the ag economy, the war in Ukraine, shipping costs, things like that. And then we're going to get into some of the things LaVell talked about with land lease basics, talking about the legal issues. So what are the state statutes if you don't have a written lease? What should you do if you have a written lease? What should be included in that? And then also just looking at fence law. I know that's a big topic across the state. Who's in charge of taking care of the fence on leased ground? We'll go into pasture leases. We'll talk about lease negotiation and communication. We'll talk about conservation, how you can do carbon credits, cover crops, NRCS programs within a lease or on leased ground. So we're really trying to hit a lot of aspects within 4 weeks' time.
And these will kick off January 18th and go through February the 8th. And like you said, a lot of these, there's going to be 34 host sites across Kansas, but you're really encouraging people to attend in person, but there's also an online option as well.
Yeah, so this is really the third time we've done this, and I really think this topic is going to resonate with a lot of both landowners and tenants across the state. I will mention this is a women in agriculture program, so we're specifically targeting that demographic because of the USDA funding that we received to do this program, but it is open to have men, husbands attend as well. And like you mentioned, Samantha, we haven't done this in the past, but we are having a fully online group this year. And that is mainly because we want absentee landowners to be able to participate. So if they own ground in Kansas but don't live in Kansas, they can jump onto our virtual group. But if people are here in Kansas, we really encourage them to come in person. Registration is open now. Most are familiar with our website, agmanager.info. If you go in the events tab, it's again the power of negotiation and communication. If you attend in person, it's $50 for the whole 4 nights. It includes dinner each night. If you attend online, it's $75 and we'll be shipping the educational materials to you.
LaVell and Robin, thank you so much for your time today.
Thank you.
Thank you.
Absolutely. Once again, that was LaVell Winsor. She's a K-State Farm financial analyst. And Robin Reid, she's a K-State Farm economist, speaking through farmland leasing basics as well as some upcoming events that you're not going to want to miss out on. We'll be back with more ahead on Agriculture Today.
This is Agriculture Today. As always, we end the week with a look at agricultural weather. And with that is K-State meteorologist Chip Redmond. Chip, in terms of precipitation, there has been a little bit across the state this past week.
Yeah, eastern Kansas once again takes the trophy for precipitation. It had as much of an inch along the Missouri border. The Manhattan area ended up with a little under a half an inch, which was an overperformance, really, when we look at our weekly averages this time of year for Manhattan and much of central Kansas. They're only in that 1/4 to 3/10 of an inch range, so still above normal precipitation from basically 81, US 81 eastward. The rest of the state, though, remained high and dry once again. Now, granted, we're not building big precipitation deficits because we're entering the driest time of the year, but continued dry conditions across that region.
And that's really why that precipitation is so important this time of year when we do get it.
Yeah, and we can easily get above normal. It just takes one storm system to really skew it, and that's as November has come to a close. That's what's really driven statewide average precipitation to be at almost perfectly normal for the entire state as an average, just because the eastern half of the state got as much moisture and more to compensate for what western Kansas didn't get. So one storm system really can skew the statistics, unfortunately, this time of year.
One of the things we also noticed this past week was just the fact that this is kind of the old adage of if you don't like what's happening, just wait a day and it'll change, because we had a lot of fluctuating temperatures.
Yeah, it's been very, very large fluctuations. We saw on Wednesday the high temperatures across the state struggled to get into the mid-30s as a high. But as of Friday, we're going to see temperatures as warm as the low to mid-70s, so almost double in just a matter of 2 days. So big changes are occurring with temperature. That's partly due to the dry conditions out west. We've got really dry air that can get cold and it can fall off quickly at night, but then can warm up just as much when we get a lot of sun. And so as a result, big temperature fluctuations daily. And then overall, we're in a very active storm track right now where we've got really cold air to our north and really warm air to our south. And so we keep seeing this clash of air masses where we get warm for a few days, then we bring a strong cold front through, then get cold for a few days. And unfortunately, we're not going to see any change in that going forward. The next week, we're going to see big fluctuations, probably not up to the 70-degree mark, but we're still going to see some big transitions with these cold fronts. And also with these cold fronts, and due to the big temperature gradients and pressure gradients as a result, we see an increase in wind as well. Relatively calm the last few weeks. Now we're seeing wind crank back up as we start to see these big temperature swings. And another good reminder here is to make sure that we're not doing any outdoor burning because, like you say, it's dry and it's windy. Yeah, it is very dry. Some places in the western part of the state have gone over 60 days without a wetting rain, at least a tenth of an inch. We factor that with dry air mass in general, with humidities in that low teens to 10%, and throw some wind up to 45, 50 miles an hour. Yeah, that's bad fire weather conditions, and we could see a fire grow explosively if it starts in the right place. So hopefully people can be cognizant of the concern and make sure we don't have any fire starts. So over the next 7 to 10 days, maybe what we've been experiencing, maybe the farther outlook, what do we expect maybe over the next 30 to 60 days? The new outlooks came out for December just yesterday, and below normal temperatures are favored for the month of December, and that's a result is that cold air to our north is gradually going to win and start shifting a little bit further south. We won't see, February 2021 cold, but we will be below normal by 10, even 15 degrees at times. Our average temperatures this time of year are falling. Our average highs are in the 40s, and our lows are in the upper 20s, so we're looking at much colder conditions in December. We'll obviously see some warm-ups with these big temperature swings, but overall below normal temperatures are favored. Precipitation-wise, we just average so little moisture. Even the forecast of dry conditions results in below normal precipitation. And so we expect below normal precipitation for the entire state through the month of December, and really not seeing a very high likelihood of a good ample moisture maker for December. That's K-State meteorologist Chip Redmond with this week's agricultural weather update. And that'll do it for this edition of Agriculture Today. For Samantha Bennett, I'm Jeff Wickman. This is the K-State Radio Network.